TradingNut, episode 48.
You know, there's been periods of 5 years where I haven't had a losing week.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Welcome to another installment of the TradingNut podcast. I'm your host, Cam Hawkins, and today we've got Steve Patterson on the show. Now, slightly different episode from what I normally do, so we don't actually get through all the questions. Steve's got such a great backstory. We dive into we get a massive amount of learnings from his backstory that we didn't get a chance to go through all the details. So we're probably going to have to get this guy on the show in the future. The good news is we did record a video after the interview, so we've got a little video clip for you guys as well that you can watch and see how sort of Steve sees the charts and a discount on some of his services as well. So guys, you can check that out on tradingnut.com on Steve's show notes page. Now, before we get into the show, there's one thing that's occurred to me in the last week, and I like to sort of drop these nuggets here, if not for myself, but for you guys out there as well, in terms of something that psychologically might be holding you back as a trader. Now, I've done an awful lot of interviews in the last week. I think I've knocked over 5 of them, right? Knocked out 5 of them. And one of the things that sort of occurred to me is, are you being derailed by what somebody else says? Some other bit of insight, some other tip, some other trick, something else. I mean, these podcasts are great for getting new content, getting new ideas, but are you being derailed by, I suppose, not being selfish enough with what you're deciding to do? And I'm sure I've said this before in the past. I'm sure I've mentioned something to this degree, but really, are you getting like the odd signal? Are you getting the odd bit of news? Are you hearing that like so-and-so's going up or so-and-so's going down, and then that's your bias for the day, and all of a sudden you can't get away from that up or down move, whatever it is. You're already thinking that this is where it's going to go because so-and-so said this is where it's going to go, and I know they're a good trader. Now, if you're in that bucket, then what I recommend is doing the opposite. I've done it before. It just doesn't work out. Go with what you've back tested. Go with what you've been practicing yourself. Just follow. It's one of those things. It's almost like you need people's advice to move forward, but then you've got to ignore some of it as well. Okay, and you've got to be selective of what you ignore. What it comes down to is verifying what somebody has said, and if it aligns with what you're saying, then great. If it doesn't, then it's just more information, more noise that may or may not be right. At the end of the day, nobody knows what's going to happen. All you know is what you've done in the past. That's my rant for the day. Hopefully it helps. It's definitely helped me for the past few days, past week. So hopefully it helps one of you guys out there who are listening to the show. Now, right, I think that's it from me today. Let's just get on with this. It's a fantastic episode, and maybe we'll get Steve on in the future and find out what else he's got going on and can teach us. All right, guys, into the interview. All right, folks, so we've got Steve Patterson here from StevePattersonTrading.com. So, Steve, welcome all the way from Ontario, Canada. How are things over there?
Excellent. Thank you, Cam. It's a pleasure to be here. And things are pretty good, actually. We had a nice summer, so anytime it's summer in Canada, you're always in a good mood.
Cool. Well, look, I'm so glad to get you on the show. It's been so some of the things I've heard about you have been pretty fantastic. You're a proprietary trader, one of the best in the world. You've had some like major videos that you've gone out there and obviously picked up a lot of traction. I think best video of the year from Forex Factory and that sort of stuff. So I think we're in for a treat today to find out a bit more about you and your story. So to start off with, should we get into your journey into trading? I mean, how did it all start?
Sure. You got some time because it's been 40 years.
Yes, yeah, I can imagine. I can imagine there's quite a story.
Yeah, 40 years is a long time, let me tell you. So, I'll try to keep it as short and sweet as possible. But I really started out being attracted to the markets in high school. I was terrible in pretty much every class except for gym. I was that guy that was a typical rebel, and came from a low-income family, and my father had the whereabouts to do the smart thing, get us out of the ghetto in Toronto at the time. There were ghettos at the time, and moved us to the suburbs, which probably saved my life. But, I typical kid from the streets. I really did not like education or anything to do with education. So mostly I didn't go to school. But fortunately, I was an athlete and have been an athlete all my life. And what kept me in school was making the high school football team. So long story short, while I was there in one of my social economic classes or something like that, one of the teachers gave an assignment to pick stocks, and we had to pick, I can't even remember the amount, $10,000 worth of stocks, and we had to manage those stocks during the course of the semester, and I happened to win that contest. And I found out, much to my surprise, even though I was really terrible at math, I had an aptitude for understanding, companies, and that kind of spurred my interest in the markets. Long story short, I didn't graduate high school. I went right to work for one of my relatives who owned a pub. Believe it or not, there's a lot of English ales that you probably would enjoy.
Yeah, I'm sure I would.
We were one of the only pubs in Canada at that time that were serving a lot of English ales, the stouts and things. But a guy walked in one day, got to know me, and he happened to work on Bay Street in Toronto, which is Canada's version of Wall Street. And he said to me, kid, you've got a natural flair. You got a street smarts about you. I think you'd do well in the stock market. And, immediately after my success in that class, I jumped on it. I thought I had these grandiose visions, Cam, that I was going to, become a multimillionaire finally. And little did I know that job would entail 2 years of walking around Bay Street delivering packages back and forth. We didn't have couriers back then, so
right.
everybody had their in-the-house courier, and that was me. So for 2 years, I basically delivered packages on Bay Street, but I was pretty tenacious. And, I wrote my securities exam. I passed that on my first attempt, which back at that time, when the average was taking about four attempts. Now, you got to remember, this is from a guy that probably read 3 books in his life prior. Passing my security exam on my first attempt was quite a feat. So I realized I had a natural aptitude for the markets. And eventually, they were never going to get me out of that stupid job being a messenger, and it was $10,000 a year. To take the job, Cam, I actually had to borrow $15,000 from my grandmother to take a job, if you can believe that.
What? Why was that?
Well, because it just didn't pay enough, and I couldn't.
Oh, right. Okay.
I couldn't even afford getting back and forth to work. So I had to get clothes. I needed suits, ties, all of those things. When you're working downtown, you need all that stuff. So I actually took a loan, believe it or not, to get a job that I was stuck in that paid me $10,000 a year for 2 years straight. And it was hell. Winter, snow. I was out there, where I actually wore out my shoes, had a hole in the bottom of it. But, I'm a very personable guy, very friendly. And, everywhere I went, I would make friends with people. And, I was in a lot of high-end brokerage firms at the time. And I would meet people, and I'd always, talk to them. And, we'd go out afterwards. Obviously, I'm a young guy. We're going to go out and, party and just network. So get a long story short, nobody would hire me because, I didn't have a university education. So even though I had my license, I couldn't get a job as a broker. So I said, screw this, I'm just going to work for free. And, I seeked out the number one stockbroker on the street at that time. And, I went through some friends, that 6 degrees of separation thing. And I went to him and I said, hey, listen, I'll work for you for free. Just teach me what you know for a year, give me the experience. And, I might as well work for you for free because I'm really not making hardly anything right now anyways. So he happened to take a liking to me, thank God. And he agreed to mentor me, and I did work for him for a year. And after I worked for him for 1 year, I pretty much earned the nickname the cold call cowboy. And because I knew so many people, I was making 100 calls a day. And, I was doing all of his pitch work, and then I'd set up appointments for him, and he'd go and close them. So, but my reputation grew quite quickly. So after I had that experience, I was able to get a job, and I did start out as a stockbroker. Now, that was right before the crash of 1987. So literally, I went from nothing to finally getting a job. I built my book to be the second largest producer in that branch within a 6-month period, if you can believe that, because I had all of these skills and I was the cold call cowboy. And back then, it was very much like now where IPOs were all the rage. So if you could get allocation on IPOs, which I could because I was working for a very large firm, it was pretty easy to close your clients because every IPO that came out basically, made a 50% return in a very short period of time. So it was just how hungry were you, right? Yeah. And, I was a kid from the ghetto, and I was hungry, especially after 2 years, 3 years of making nothing. So I built my book, and the market crashed in '87, and it was the most devastating time in my life. I got physically ill with some health conditions. Hospitalized. It was just a terrible, terrible time all around. They were pointing fingers, looking for scapegoats for everybody, and I was one of the scapegoats. I won't get into that too much, but the bottom line is that after the market crashed, I realized that, I knew nothing about trading, absolutely nothing. I was spending all of my time just trusting what the analysts were saying and trusting what, people were telling me, not really understanding what I was selling. So I took a year or two off, and I decided that I was going to go and do the exact same process. And I went and mentored underneath 2 floor traders, and they were locals. I went to New York and Chicago, and I mentored underneath them for free again. So I was just in the country working for free. And, they taught me how markets work. They taught me the business model of floor traders. again, with some bad timing here, Cam, around the time when I started to really get good at understanding what it was like to be a floor trader, the electronic markets started to come in. And that job, basically evaporated. I couldn't get hired. I didn't have enough money to get support as a local and, get backing as a floor trader. But I had learned the business model. All right. So, not to be a quitter, I went and actually got involved in a cell phone company after that. And that happened to be some good timing on my part. Because cell phones, we were selling cell phones back there for $2,000 and $3,000, $4,000, and I was selling cell phones, and my best friend owned the company, and we made a boatload of money, just a boatload of money for that time. So that was really my first real success in life. Was, believe it or not, wasn't even in the stock market. It was actually in the cell phones. But I had saved up enough money, and my friend actually sold the company to a major conglomerate, which I didn't really own any of it. I just, I was just making my commissions. But I needed another job. And I still had some fairly serious health issues from when the market crashed, because when the market crashed, I had all my friends and family in the markets, and everybody that had trusted me got wiped out.
Oh dear.
And yeah, and it was really hard, because that personal responsibility that I had towards everybody literally physically made me sick. I had several digestive issues that required hospitalization and a couple of surgeries and some drugs all the time. I used to take prednisone all the time. But after I got involved in the cell phone industry, it started to bounce back, and I started to actually make some money again. So what I did was, when I had a chunk of money, I actually went out and bought a home, one of the very, very, very first home computers that you can buy. I went out and bought it. I hooked up to, I believe it was DTN at that time, a satellite to get market data. And with a little tiny 12-inch, screen, I started trading the markets. And, it was a real learning curve to take that floor trader business model and try to apply it to a two-dimensional screen, right? Because it basically, just to show you give you an idea of the major advantage. Let's say you were working on the floor, okay, Cam, and you go to a pit, let's say the Bank of America pit, and you look over and you see Goldman Sachs, buy 100,000, buy 200,000, buy 300,000. Then you see Lehman Brothers, buy 300,000, buy 400,000. When you're on the floor, although they're trying to hide things, it's really easy to see the order flow, because you can see who's doing what, and then you can see how the price reacts to that. So you have like a four-dimensional, three-dimensional view of how price is moving, which is really easy to make money as a floor trader. I mean, yes, there were times I was faking this out, but it took a long time to translate that to a two-dimensional price chart, right? It took me probably $300,000, which fortunately I had from the cell phone business, in losses, over the course of 4 or 5 years, right? And, it really took a long time to translate that onto a two-dimensional chart. Well, then charting packages started to come out, and they started to get a little bit more elaborate, and you could buy, indicators and things like that. And I found that stuff, at one point I had like 5 indicators on my chart just to kind of help me get that view. That kind of turned it around, meaning that now I started to become relatively consistent after about five I'd say 5 years, I started having positive months and I started having positive years. And then that kind of brings us up to the next step, where at around that same time, proprietary trading firms started to really take hold. And because I had eaten up so much of my savings by the time that I finally got profitable, I really had no choice. Right? I had no money left. It took me, I wore out all my money trying to get profitable. So even though I didn't want to work for a proprietary trading firm, I really had no choice. And so I signed up with, a couple of them, and, things went well. I had, good months, good years. And then one of them that I signed up with went bankrupt. So that ended that. But was living pretty much paycheck to paycheck, month to month, just from my trading income. And then a couple other firms came to be, and I joined them, and had several good years where I was able to make back all of my losses, and then finally get to a point where I had some savings. But now you're talking, I'm 35 years old, 32, 33, 35, somewhere in there, right? So, maybe a little bit older, 37, 38, yeah, something like that.
Yeah.
But so that was great. And then I had a big 5-year stint working with several prop firms. I worked with pretty much all of them because I just wanted to get as much money as I possibly could to, now that I was finally making money. And they would go under sometimes, and or the government would shut them down because they were kind of operating in a gray area where eventually you had to give them money as a deposit. And that's pretty much the business model now, where you still have to give them money. But there are, 2 or 3 out there that I still work with occasionally, not very much anymore because I have enough of my own money. But, I had to really just use other people's money and give them a split. So that kind of, do you want me to just keep going?
Yeah, look, it's really interesting. Now, I want to get to sort of like the current day, like, where you are. I mean, I don't even know what year we're in now. So you're age 38. You did 5 years of prop firm, and you got a bit of cash behind you. How long ago was that? What can you put it in context?
Well, that was probably 15 years ago, right? Maybe 15, 17 years ago. That was when the last time that prop firms were really like good. Maybe a bit shorter than that, maybe 12 years ago. But the point is, every time I'd make enough money, I'd quit the prop firm, because I'd always have my own money, and I'd always want to trade my own money versus trading the prop firm, because I'm giving them a split.
Yeah.
And then as retail commissions started to really come down, with the E-Trade was the real one that really brought retail commissions down. I mean, I can remember doing, 1,000 shares of a stock and paying $600 in commission in and out, right? Believe it or not, that was maybe that was exaggeration, but I'd say $300 in commission, right? In and out, So if you were trading like that stock 2 or 3 times a day, you're paying $600 in commission, right? I mean, I can remember those days. But as soon as that came down, I didn't want to work for prop firms anymore. I just wanted to work for myself. And have that technology and those low commission rates. The only advantage that a prop firm gives you is that you're sharing commission volumes with several other people, so your rates can come down. So even to this day, I still trade with a prop firm to a little bit, because my commission rates, when I want to be really active and I'm day trading a lot, I'll just run it through my prop firm because my rates are so low, and I don't have to pay. I don't have to pay a lot of fees that a lot of brokers still charge. So bring us to the present date. Present date right now, I trade private money for 3 of my personal friends who happen to be extremely wealthy real estate developers. And they've given me a little bit of money, not a lot, but I trade that for them because I have a very favorable split with them. And it's no pressure. I find that when I trade other people's money, I trade like shit, to be honest with you. Right. Every time I try to trade somebody else's money, I've got memories of 1987 in my brain that are like, just absolutely terrible. But with these 3 guys, they're very, very, very wealthy. And, if they lost the money that they gave me, they wouldn't even blink. But not that they're going to lose it, but I'm just saying it takes the pressure off. So
okay, cool. And so all right, just diving back into the story a little bit. So, I mean, you said you're talking about, like, you started using indicators when the price chart came around and things started getting better. You obviously sort of overcame a hurdle there where you were consistent. I mean, can you take us back to that point where where things just changed around for you?
Trading is a funny thing, Cam. There are, I always tell people, I have no respect for you until you've traded for 7 years. And, even after 7 years, like anybody that's traded in the last 11 years, this is not a real market, right? I mean, this is an artificial market. There's no price discovery going on, right? I mean, you have an artificial market that's pretty easy to trade, right? So with trading, you got to understand it's very cyclical, and there are so many things that can affect you as a trader. So I hate the word consistent. I really do, because there's been periods of 5 years where I haven't had a losing week, but then there's been periods of 2 or 3 years where I can't put together a winning week, right? It's just, there's so much that goes into it, not just the markets, Cam, but when you're an independent trader, you've got so many battles that you're fighting, from your health, I went through a couple of divorces. During those divorces, I couldn't trade for shit, even though the market was great. Right? Excuse my language. I hope I can swear.
You're right.
I'm Irish. I always use that as an excuse. People I don't know if you've ever seen that Russell Peters thing, but he's got a comedy skit out there where he talks about the Irish, that most foul language people on the earth, and I always thought maybe I was just low class or something, but apparently it's in my genes.
You're right today. You're all good.
Yeah. So I hate that word consistent.
Yeah, it's interesting. It's really interesting.
I mean, there were times when to answer your question, probably after I'd lost $300,000. Learned what floor trading was about, adapted to the charts to understand and read those charts properly, and then be able to translate that floor trading business model took me about 3 years. Then I got rid of all of my indicators, and then once I got rid of the indicators, I became really consistent, meaning that I could always pay the bills. Right? That happened probably, I'd say when I was always able to pay the bills happened 12 years ago. Now, in between that 12-year period, there were 2 years where I lost money for that 2-year period. So 10 years of consistency. But during that 2-year period when I was losing money, I had savings.
Yeah.
So when I say I was always able to pay the bills, it was because I had saved up enough profit from the times when everything was clicking. Does that make sense?
Yeah, and so the times that it wasn't clicking, I mean, was that attributed to the divorces or something else?
Yeah, she went through a couple of divorces. Health has always been a challenge for me. It's always been something that I've had to really watch. Like, for example, if I don't sleep 9 hours, I can almost guarantee you I'm going to have a losing day the next day. It's almost like clockwork. Right. I don't even turn on my computer anymore if I don't sleep 9 hours. Right. So, like, there's little things like that. There's so much psychology that happens, and there's so many personal situations that happen that you really have to learn who you are, right? And so if somebody were to say to me, am I a consistent trader? Yeah, now the answer would be yes, but that's just because I just know when not to do things. Doesn't mean I can do it all the time, right? Yeah. Doesn't mean I turn on my computer every day and I print out money. No, some days I just stay completely away, right? And I have other things that I do. Give you an example. I play poker. I made about $60,000 last year just playing poker. And people say to me, well, Steve, do you do it because you love it? I go, no, because I do it because on the days that I'm not going to trade well, I don't want to have, a $300,000 or $400,000 exposure to the market, or I don't want to have that. I'd rather just go take $1,000 and go play poker, because if I think I'm going to have a bad day, the worst I can lose is $1,000, right? Yeah. And that's why I play poker. I play poker because I've learned all about myself, what's my strengths, what's my weaknesses, what to avoid, when to push it, when to put the pedal to the metal and really pump it, and when to just back away. And that's market conditions, obviously market conditions. And also knowing yourself, right?
Because I suppose anyone could be, anyone who's consistent is like a few minutes away from being hugely inconsistent. Oh, all you need to do is jump on a computer and bang, place a ridiculous order without looking at a chart, and then you've blown everything, right? Or if you leave it and don't check your account for another week, there's a high chance that you're probably going to be, you're going to destroy your account. So you're only a few minutes away from being inconsistent. So you're right. It is the not trading that is, or not knowing when not to trade is critical.
Critical. Beyond critical. It's beyond critical. Just tell me a trader in history that that hasn't had a blow up. Yeah. I don't. Yeah. I don't know one. All the greats. Starting from the very book that every trader worships, which is, Jesse Livermore and, Reminiscence of a Stock Operator, right? And, it's not if, it's only when, right? And I can remember when I first read that book as a young man, and I think this is freaking stupid. What am I going to do? What am I getting myself into being a trader? This is so dumb, because ultimately I'm going to make a lot of money and I'm going to lose it like this guy, right? Is that my future? Yeah. But I've learned to adapt to that, and I've learned to pay myself, right? I take money out of the markets on a regular basis. I could have a multi-million-dollar account if I would leave all my money in, maybe, or I might have blown it. But I'm constantly paying myself every 30 days, every 60 days at the most. I take the money out and I spend it, because that was, when I was learning to be a floor trader, that's what I was taught to do. Like, spend the money, because it's not yours until you spend it and you buy other stuff with it. It's potentially the market's again.
Yeah. Even then, even withdrawing it is still potentially the markets, right? Because you can refund the account and, get back in again. And so you're right. Yeah. Until you spend it, it's not yours.
Not
Interesting.
yours. It's funny because there's so many people right now that are just, in this bull market, right? And my fiance said to me the other day, I said, look at, like the market is going to have a major correction. The exact minute and day and the second, I don't know. And she says, yeah, but, Trump, and it's been going up for 11 years and the Fed and, this and that and this and that. And I said, look, there's one thing that I've learned in 40 years of my life is nobody gets to keep their money. Right? Yeah. The market exists to separate you from your money. So, yeah, they've beaten the heck out of the bears for the last 11 years. They ain't got no money left, right? And what, you think they're going to let all those bulls keep that money? No, of course not. And when I say they, what I mean is the professionals inside the industry, the institutions that run the overall market volumes, and the people that are the real professionals inside the industry. So all the mom and pops, all the retail traders that have been buying the dip, buy the dip. And what I told her was, look, it's going to happen in a day or two. There's going to be no chance for them to get out, right? Or what they'll do is they'll just whip it around, so that even if you are in and you have relatively tight stops, you're just going to get the liquidity is just going to get hit, right? So until you really understand that the business model of the floor traders, the business model of the market makers, the business model of the institutional desk trader, the business model of the investment bank traders, the business model of the macro hedge fund managers, the business model of the corporate raiders, right? So you understand all of those business models, you really don't have a chance, because they all are on different time frames, and they're all out there to separate the retail trader from their lack of knowledge about how the industry actually works, right? So, I mean, that's really what I've dedicated the last, to bring you up to speed, what I really dedicated I knew the business model of floor traders, but what I dedicated the last, I'd say 7 years, 8 years to, is understanding the business model of the market maker, understanding how exactly does an investment bank make money? How is that trader making money? What does he do? How do the orders flow from the proprietary side of that bank, from the retail side of that bank, directly to his desk? What does he do with it once he gets it, right? And when I say them, these days it's all algos. So, even though it's not really a person anymore, it's an algo that was written by people that knew that business model, and now they just monitor the algos that are executing those business models. Does that make sense?
Yeah.
So that's been my quest for the last 5 years. Unfortunately, I've had the luxury of meeting some really great people inside some big institutions that I don't really want to, drop any names or anything like that. But I spent a lot of time doing what I did in my early days, Cam, and that was networking, right? Getting to know people, working for people for free. I still have done that to this day. Let's say I want to find out, what Knight does. I'll go to their door and knock on their door, say, hey, I got work here for free. And they look at me like I'm a weirdo, but what I gain, from working at an investment bank or working for a market maker for 5 or 6 months. I went to Europe for a little while, and I worked in London completely for free for 8 months for one of the largest traders for Deutsche Bank. And I won't say any names or anything like that, but I worked for free. You know, on my own expense. You know how expensive London is.
Yeah,
right?
yeah. I lived there for a bit.
Yeah. So I still do that to this day, and that's kind of brings me to, you know, where I am right now, which I feel is a completely rounded and you know, probably very versatile trader. But even then, knowing what I know, I still would not engage in the markets outside of the restraints of my personality. Okay?
Yeah.
So you probably have some other questions. I'm sorry. I told you this was going to be long. It's been
Look, it's been fascinating. It's been brilliant. So I was actually wondering if we probably need to get you back on for a second interview to go through the nuts and bolts of my questions, as to whether or not if you've got more of this story to share, it might actually be worthwhile getting you back on. But let's. I think it'll be helpful for the listeners if we can work out like what exactly you are trading this in this day and age, and how much time you do spend in the market. So, do you want to start off with the instruments that you'll focus on?
Sure. Well, let me tell you, first of all, I've traded everything, okay? There's nothing that I haven't traded. Absolutely nothing. I've traded baseball cards. I mean, I'm not joking. If it fluctuates in price, I'm interested in it. So I've traded everything. You know, I have years and years of experience with trading Forex. Did nothing but get nowhere. Absolutely nowhere. Even with all my knowledge, even with all my understanding, I ended up, after like trading Forex for 4 years, like being net down slightly, not a lot, but slightly. I made a bunch of money, I lost a bunch of money, I made a bunch of money, I lost a bunch of money, I made a bunch of money, and then finally I just said, you know, that's enough of that. I traded options for many years. I actually worked with an options market maker for a very long time. I did okay with options. I made really good money on it. I still trade options to this day. But the bread and butter of what I trade, and I want to give you that background, is because you know, people always come to me, and you know, now I'm an educator. So people always come to me and, you know, I want to learn this, I want to learn that, I want to learn this, I want to learn that. And I tell them, look, the easiest way to make money is in the stock market and with equities, okay? And I liken it to this. It's actually, there's two schools of thought about it, and depending on your personality, I always tell you to kind of go with this. So, are you married, by the way?
Yes. Yeah.
How long have you been married for?
Oh dear. About 15 years.
15 years? Okay,
yeah.
Well, it might be a stretch for you. But kind of remember when you were a young single man,
yeah,
and you wanted to meet the perfect woman, right?
Yeah.
And I say to you, Cam, you have two choices. You can stay in the little small town in New Zealand, and there's 12 single girls there, or you can go to New York where there's, you know, 12 million single girls, right? And equities are the easiest asset to trade because you have so much choice, right? And if you have edges, whatever that edge is, I don't care, a MACD crossover, you know, it doesn't matter, whatever you define as your edge, you know, breakouts, whatever. Well, if you've only got 12 assets to choose from, you better be the damn patientest person in the world, because how often is your edge going to exist? Now, I need to qualify that because I want to test you on something.
Okay.
Do you believe that the markets are random?
No.
Okay. Well, I can prove to you statistically and mathematically that the markets are random 85 to 90% of the time on any asset. And I can statistically and mathematically prove it to you just by doing a distribution curve on it. So I can show you maybe a little bit later on, but just imagine what a distribution curve is, right?
Yeah, it's like a sort of bell curve type thing.
Exactly, a bell curve. Well, if you take the opening and closing price of any asset over the last 1 year, 2 years, 10 years, you can take it for whatever time period you want, and you take a look at what that distribution curve looks like, what you will see is that 85% of the time from open to close, an asset will stay within a very, very, very defined percentage change. So if, for example, we take an asset like the SPY, which is a very heavily traded asset, 85 to 90% of the time, that asset will not move up or down more than 0.4%, 0.4% either plus or minus. So negative 0.4, from 0 to negative 0.4, it spends half of its time. From 0 to positive 0.4, it spends the other half of its time, being 85%. So what does that mean? Well, that means if you're trying to be a day trader specifically, right, that means that the market is not moving very much. And that chances are, if you're using very, very tight stops, you're going to get stopped out because the market's just going to go and eat that liquidity on either side. And if it doesn't do it that day, it's going to do it the next day. So you might say, well, I can escape by being a swing trader. Well, it doesn't quite work like that either, right? Because it's going to, markets seek out liquidity. So let's just say that the market moves up really strong today, like it did. Well, the reason it's moving up is because it's seeking liquidity, and once it finds that liquidity, it's going to eat that liquidity, exhaust that liquidity, and then it's going to move to the next lower liquidity a lot of the time, with the exception of a very, very strong trend. Okay, now in the exception of a very strong trend, what happens is that it still moves in one directional move, but it will always retrace very quickly to wipe out lower liquidity of all the trailing stops. Again, you've got to come from the perspective of what the business model is. If you're making money, a market maker can't make money because he's usually the one selling it to you. Right now, I know it's kind of really an abstract thing, but it's true, right? I mean, maybe not you particularly per se, right? And it might not be him versus you, right? You might sell it to another guy, and another guy comes in, and there's 5 people in between. But it's a generalization. If the retail trader's making money, a market maker can't exist, and they wouldn't be in business for 300 years. Because who would they sell it to?
Yeah,
right?
exactly.
If we're making money, they can't make money. There's no way. But meanwhile, they're in business for 200 years, some of them, right?
Yep.
Same with investment banks, right? So the point I'm trying to make is that technically, when you come from the perspective that all markets, and it doesn't matter whether you're trading Forex, stocks, or whatever, all markets are random 85% of the time. And if you can just accept that as a reality, your life will be a lot happier and a lot easier. When you say, well, Steve, that kind of sucks, right? But guess what? It doesn't. It's actually one of the greatest blessings that you could possibly imagine, because if you can be in that location where it's going to move that 15 or 10% of the time, you now know what all the professionals know.
Yeah.
Okay? So if you spend all your time looking at patterns and indicators and blah, 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 you spend all your time looking at that, you're going to miss the big picture. But if you say to yourself, where is this most likely to, if you understand their business model and how they do things, and you say 85% of the time it's random, and I'm just going to set up an alert at a level, and then I'm going to wait for an alert at a very specific level, and I'm not going to touch anything else, right? Because if you look at statistics of how retail traders lose money, did you know that most retail traders are successful 65% of their trades? Did you know that? actual fact, I can show you 12 million actual trades of data.
Oh, okay, I didn't know that. So 65% of their trades are positive trades.
They make money on 65% of their trades. That's pretty damn good, right?
Yeah.
Yeah. But do you know what the average that they make on that? I'm going to use the Forex market here because it's easy with pips, okay?
Yeah.
You know what the average that they make, the average number of pips they make on their winning trades is?
I would guess 5.
Oh, okay. Well, you believe it or not, it's actually 30.
Oh, really? Okay.
Yeah. But do you know what the average loss is?
100.
Yeah, more. It's around 70, but close enough.
Right. Okay.
Now you add in all the spreads, right? And you add in all the commissions, and you have a losing trader.
Right.
Right. So by the time you actually do that, then you got losing traders, right? So retail traders make money, and this is where I always say, so many. You're not a retail trader. You're not a real trader to me until you last 11 years or 7 years, because you can be fooled by randomness for a very, very long time, right? And you might think you have an edge, and you might think that you know what you're doing, and you can make some money, but when the next cycle comes around and the market changes, right, that edge will probably evaporate, right? Because you can be used to it, and you're going to be, trading that pattern or trading that crossover or whatever the heck people trade. I don't know anymore.
Yeah.
Right? So I guess where do we start with this whole thing?
So we started with you were saying 65% of retail traders make money. 30, they make 30 pips, they lose 70 pips on average plus commission. They're basically a losing trader. Is there a solution to that, I suppose?
Yeah, so my point is this. My point is that if you can accept the fact that the markets are random 85% of the time, if you can accept that, be patient, and then trade in something that gives you more of those 15 or 10% of the time, going back to the stocks, that's where we kind of started, or equities, right?
Yeah.
So what do I trade? I trade equities. There's a very, very long story to answer a simple question, but I trade equities because every day I have 4,000 that I can choose from, right? So every day I can go and look for that one or two out of that I really, really well, out of 4,000 I might find 10. And then out of those 10, I can whittle it down to 3. And out of those 3, I can find one really good trade that particular day that will meet all of the criteria of my edges, right? So I trade equities for that reason. I do, some of my students still trade options. Some of my students still trade Forex. But I tell them, look, if you're trading those types of assets, you have to up your patience even more. I'm not a patient person, right? So I trade what suits my personality, because if I try to be a patient person, I end up losing a lot of money.
There's a good lesson there, actually, because I've never really thought of it like that in terms of the fact that you need to be more patient with the likes of Forex, where there is, there's just not as much choice. There's not in the thousands of choice. You've got less than 100 really. So it is really interesting. That said, I think where I live, like international stocks are really sort of not that easy to trade for whatever reason, just because I'm in the middle of nowhere. So therefore sort of drift towards Forex. But yeah, really interesting stuff. Now look, Steve, I don't think we're going to get through the rest of the questions, which is the bulk of my interview, but I think we'll get you back on the show if that would be all right.
Absolutely, sure.
Because I think what the guys have found out today and learnt today, sort of, if they were to go back and listen to some of the older interviews that I've done, it really sort of takes things to the next level. It's almost like a sort of step ahead of what some of the other people have said on previous shows, and validates what I've heard around the market makers and how the sort of markets operate, and some of the stats around it, which were really fascinating. So I think everyone's going to learn a lot from this interview, but without I asked the question of what instruments do you trade? We went on for 20 minutes, so I don't want to ask any more because we'll be here for like 5 hours, and I know you're a busy man. So I think,
it's 45 years, Cam. Yeah, that's a lot. I forgot what most people know.
Yeah, exactly. So I want to ask you to let the guys know what's the best way to get hold of you and wrap up the show there.
Sure. Well, I'm always welcoming people on Skype. If you go to my website, Steve Patterson Trading, you can talk to Carolyn. She's always there, but you don't even need to do that. I'm on Skype a lot of times. Just don't bother me during the trading hours. But my Skype address is SSP, like Steve, Sam, Patterson, Trader. Not trading, SSP Trader. Anybody is welcome to add me on Skype. When I'm free, I'm happy to give people a free 20-minute interview. I'll look at what you're doing. You can add me if you like, Cam. Tell me all about what you're doing.
Yeah.
Tell me how you're making money, where you're making money, and then I'll look at that and I'll give you a personal review, if you will. Right, and say, this is what you should keep doing. This is what you should not do. Cut back on this. Do more of that, and I'll just point you in the right directions that will, help you get your trading going. So if anybody wants to do that, I offer that completely for free, just paying it forward. And if somebody wants to take it further, obviously I offer courses. And just quickly before I go too far, I have a floor trader stock twits room, and you just look up Steve Patterson Trading on stock twits, and again, that's something I do completely for free. I really try my hardest to pay it forward. A lot of people, as I told you, Cam, a lot of people help me to get to where I am. A lot of people, so although I have to value my time because I do trade for a living. I do try to pay that back. So anybody's welcome to reach out and ask me whatever they like. Just, again, don't bother me during trading hours or I get really grumpy.
Righty-ho, cool. Well, look, we'll try and get you back on here, Steve, because I think it'll be a fascinating interview to get to sort of the more technical aspects of what you do and answer some of those other questions I've got on the show. So let's try and pencil something in the future. But in the meantime, look, a big thank you to Steve for sharing with us today. Everything we've discussed here, along with all the links, are going to be in the show notes. To find them, simply search for Steve in the search box on TradingNut.com. Until next time, I wish all my listeners trading happiness and success. All right, folks, there you have it. Interview with Steve done. Now, look, we didn't get through the whole lot, but we got through a lot. And there's actually more. So if you want to find out what Steve's got to say around timeframes and trading stocks and timeframes in particular, jump onto the YouTube channel. There's a link in the show notes. You're able to get access to that video. It only goes for a short while, so it's quick, it's short, it's sharp. You're going to learn one or two things in there as well. So, folks, check that out. If you want to check that out, along with seeing what this offer is, jump onto Steve's show notes page on TradingNut.com. You're going to see the video. You're going to get the audio version of this again, and you're going to get the notes as well, and you're going to get a link to that offer that we've got there on TradingNut.com. So head over there, guys. Until next week, have a great trading week, and I'll see you in the markets.